looking at our economic calendar and considering the instruments that we have been monitoring since the beginning of the week, we do not have any macroeconomic event to look forward to. And remember, yesterday we were expecting a couple of macroeconomic events that will be affecting the US dollar, and that was the ADP employment change and the ISM services PMI, which actually came below expectation as we saw a negative variance of 0.84 and 0.92 respectively on this event. So it's not a good thing, good outcome for a good signal for the US dollar actually, and we're beginning to see the reflection on the chart as the dollar has continued to struggle amongst its peers in the market. And especially after a below expectation reading from the ADP and the ISM services PMI. So now all attention turns to the non-farm payroll, which is coming up tomorrow, Friday, and obviously we shall be seeing the reflection of the anticipation of the non-farm payroll on the chart today. So we are going to be taking all this into consideration while we make a decision ahead of the New York session. So I advise you to stay tuned in so that you can understand, be attentive so that you can be part of us. And if you do have any question at any point in time, feel free to let me know in the comment section. So with that being said, here let's dive into the market. And as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil chart here, the 1 hour time frame, obviously, you will see how price action has been a little bit choppy since the beginning of the week as we continue to see a consolidation phase between the $81.50 level and the $79 area since the beginning of this week to further emphasize the indecision in this market. And this is as a sign that participants are still very indecisive right now, as we are not sure if price will continue to the upside, or we might likely be seeing the beginning of a retracement phase in this market. And if you remember, at the beginning of the week, we observed that we had a huge bullish gap here, which dovetailed to approximately 48 pips here at the beginning of the week. As you can see, we had a strong bullish gap, and this is well connected to the decision from the OPEC Plus during the course of the weekend, where the pledge to cut oil production with the hopes of stabilizing oil and the oil prices across the globe. But what we have seen so far here in the last couple of days now, we were expecting that we might be seeing a significant move to the upside, but what we have been seeing so far here seems we are really not seeing that traction actually. And this could be as a result of the US. The US has been trying to ensure that the oil prices does not skyrocket. So they've been pumping in oil into the supply market to ensure that this price is well controlled, and we have been seeing that effect so far, and that has resulted in this kind of situation that we have here. So now with this information we have from the fundamental perspective, let's look at the technical side of the chart to see how we could actually take advantage of any trading opportunity. Well, during the live session yesterday, we were looking out for selling opportunities actually, and we said if price action breaks down the bullish trend line, which has been supporting this momentum since the beginning of the week, then definitely we shall be looking out for selling opportunity. And we saw that breakdown happen actually during the live session yesterday, and since then price action has been trading below the $80.50 level, and we saw price action move about how many pips, about 80 pips thereabouts in our direction before we saw this bullish momentum begin again. At this point in time, I hope you moved your stop loss accordingly to secure the sell position, and if you had done that, you would have been taken out of that position at worst case scenario break even. So right now, going into the New York session today and considering the current market structure, how do we intend to take advantage of a trading opportunity here? Well, the first thing that I think is looking more likely here is the potential of a retracement phase in this market. So we are going to be taking a look at that one first of all. And if we zoom out a little bit to see what has been happening since last week, considering the impulsive move that brought price into the zone between the $81 area and the $80 level, you will notice that a retracement phase seems long overdue in this market, as those who took advantage of the buy position somewhere right below the $75 level will at one point in time want to be doing some profit-taking activity, which definitely will reflect on the chart in the form of a retracement into structure in anticipation of that second wave of bullish momentum. And if we look at the current structure and look at what has been happening here in the last 72 hours, you would notice that price action appear to be transitioning into something that looks more like a reversal pattern, where the neckline of that reversal pattern falls around the $79.80 level. So if I give you a visual representation of this, you will see it becomes a little bit clearer. So we have something like this, where you can see since Monday morning we have been seeing buy pressure resume around this area. So every attempt by the sellers to break down the structure has been met with strong resistance from the buyers at any point in time. So for this potential reversal pattern identified here could turn out to be a valid and tradable one, we need price action to break down the $79.80 level, breaking down that neckline to give us that confidence that we might be in for a retracement phase to the downside. So that is the only way we are going to be looking out for selling opportunities in this market. So we are waiting for price action to break down the $79.80 level for us to join a bearish move to the downside. And you know, in as much as we expect that potential to happen in this market, we also want to take into consideration the activities of the buyers in this market. And if we look at what has been happening here in the last couple of weeks, you will see that price action has been very, very bullish. So we cannot ignore the potential of the buyers at this particular point in time. So like I was saying here, we also want to take into consideration the potentials of the buyers in this particular market. And if we consider the long-term bullish momentum here, there is a high chance that buyers could actually come in. And if they actually come in, how do we intend to join, or what do we want to be seeing on this chart that will give us that confidence to feel comfortable in the buy position? So now, if you look at what has been happening in the market here since Tuesday's trading session, within this all choppy scenario we have been witnessing here, you would have noticed that price action has been finding lower highs. Though we couldn't find lower lows here, but it is quite evident that we have been seeing lower highs in this market. And to further emphasize this, when I connected the series of lower highs here, you would have noticed the bearish trend line that you can see on your screen right now. So I think I would like to do some readjustment to this trend line a little bit. So if I bring out my line chart and then we connect the series of lower highs here, I want to do some readjustment, please. Okay, so we are going to make some amendments when we bring out our candle charts. Okay, here we go. So we have a trend line already figured out here after connecting the series of lower highs. So this trend line definitely is going to be our yardstick for trading activities, as we want to see price action continue below this trend line for us to be comfortable in our sell position. But if at any point in time price action breaks out of that trend line, then at this point we want to be seeing this as a strong signal that buyers are gradually coming in this market. And if this is the case here, what we are going to be doing, remember, we are not getting too excited at this point, as we need some further confirmation to give us that leverage and confidence to actually buy the US oil. So what we are going to be looking out for is price action doing a retest of structure. So as soon as price breaks out of the trend line, we want to scale down to our lower time frame to look out for a retest of structure where buying pressure is identified right around the $80.50 level, so that we can be part of that trend continuation to the upside. Then a further breakout of the $81.25 level will welcome additional position to this trade. So this is the only way we can be looking out for trading opportunity in this market. So we're looking out for buying opportunity if a breakout of the $80.50 level happens, which also shares a confluence with that bearish trend line. So what this simply means is that if price action breaks out of the $80.50 level, simultaneously the bearish trend line here would also have been broken, hereby giving us a sign that the trend line may no longer have the capacity to continue to hold that bearish momentum here. So that is how we are going to be trading the US oil for today. And if you have any questions, let me know right in the comment section below.